Well, what do you say we take a look at what the grain markets are doing here? We had the corn market actually start out a little bit firmer today, and then it seems like it kind of lost its traction among the trading session. So we had a higher trade overnight, opened up just a touch firmer, about 3/4 higher, and now we have the March corn sliding down to 369. It's down 3/4 cent. We have the July contract down 3/4. It's now at 385 1/4. The December is now unchanged on the corn market. Now on the soybean side, we have the March down 7 1/4. So the weakness kind of running rampant here in the grain market once again today. Getting a little easier as we go. We have March at 893 1/2, while July is down 7 at 921. The November soybeans, it looks like they have been trading about 7 lower here today. It looks like a last trade on November would be at 938 3/4. On the wheat trade, on Chicago's wheat market, they're really getting hit again. March down 12 at 477 3/4. July down 10 1/4. In Kansas City wheat today, we have March currently down 9 at 451 3/4, while July down 8 3/4 at 469 1/2. Seems like that $5 benchmark is just a distant memory now. Minneapolis wheat on the March contract, it's currently down 6 at 549 1/2, and July down 5 1/4 at 555 1/2. Scott Gecas joins us. He's with Walsh Trading in Chicago. Boy, oh boy, a lot of downward pressure this week here in the grain markets. Everywhere you look, there's nowhere to hide.
Yeah, that's for sure. There was a bunch of strong liquidation, big volume, big volatility spikes. Call put skew completely flipped from calls to being a little bit more expensive to the put side on the downside. So, there's all kinds of things going back and forth. The trade war talks left and right, the volatility machine as Trump. So you never know what's going to come out, what he's going to tweet. So all the traders are definitely keeping an eye on what's going to come out of the China trade war talks.
Corn market, it continues its sideways pattern, though, doesn't it? That it's been trapped in for like 4.5 months now?
Yeah. The one thing I want to point out with the corn market in particular is the cumulative sales were actually up about 45%, even though the inspections were a little bit off. So that is lending a little bit of support. That's another market that has a little bit of upside skew to it, just due to with the hopes that China is going to come in and have that buy campaign start.
Now, on a soybean chart, we talked about it here recently that they had looked similar in appearance to the corn, where it had kind of gone sideways and gone flat. But now it almost looks like it maybe has rounded the top a little bit here in the soybeans. How do you read that?
Yeah, well, the one thing that we're looking at is we look at the flow. So order flow, option flow, stuff like that. So what we seen yesterday was traders are starting to put that short soybean spread on, long corn spread on. So that was a big catalyst for yesterday. So we're going to see how that's going to shape up in the next few days.
Now, they have the Ag Outlook Conference going on in Arlington, Virginia this week. Do you expect the grain market to perhaps make a big move as a result of that conference or not?
Well, it just depends on what comes out. It's all about the headline risk, and it has been all about the headline risk for about the last, between 8 to 10 months. So we're going to see what comes out of that. If we get any positive news headlines out of that, you should see a little bit of spike in a little bit of supportive with price.
Okay, Scott, hold that thought. We'll come back and we'll talk about our livestock trade also. We have had some big moves in the livestock trade this week, and nothing different today. And we'll talk about that in just a moment. Come on back. Well, I want to go back to our conversation with Scott Gecas. He's at the edge of the trading floor in Chicago, and Scott is with Walsh Trading, and he rejoins us right now. Now, we talked about the weaker tone in the grain markets. Yesterday, we had a higher tone in the cattle market, but not in the hogs as they closed limit down. Now, there's been a lot of talk about the fact that there were rumors circulating around that there may have been some ASF found in some feed in Canada, and then later in the day, that turned out that that was roundly denounced with that rumor. So speculation was maybe there'd be a rebound today. No, it didn't happen. Let's take a look at lean hogs first this time around, and we have the nearby April contract down $2.35 at $54.17. The May down $1.45 at $64. Now, we did actually have a low on the April. I'm showing the low of 52.25, so that would have been close to expanded limit down. It would have been over $4 lower if that was the case, but it has bounced back sharply off of that, even though we're still sharply lower. Going back to the cattle side now, yesterday we had triple-digit gains on a few cattle contracts, and they were kind of tentative coming out of the gate this morning, but they have firmed up. February live cattle 40 higher, the April now 60 higher, now 53 higher at 128.97. June's up half a dollar. On the feeder cattle market here, we have the nearby March contract 5 higher at 143.80. The April contract absolutely flat at 146. So not much going on in the feeders, but a little enthusiasm continuing in the cattle market here today. When you look at these from a trader's perspective here, Scott, first of all, at the cattle, how optimistic are you that they can resume or continue this upward momentum that they've had, while the hogs seem like they're trolling around contract lows all the time?
Yeah, right now they're completely inverse. The cattle market is very strong, moving all the way up to that 128 contract highs yesterday. Those 130 calls in the front month are still active. We're running into that cycle where seasonal demand is expected to be a little bit lower. Whether or not it's actually going to happen or not, we have to wait to see how those numbers actually play out. I actually think they're not going to be as less demand as people are thinking, so I think that trend's going to remain to the upside.
Okay, now the lean hog trade, as I mentioned, they have been making new contract lows as we go, and they actually just blew them out earlier this week, long-term lows there. They're just, I guess, searching for some sort of support, aren't they?
Yeah, I mean, right now everyone's just going through price discovery. You know, with the hog market in particular, it's in a complete bearish setup. So you have a little bit higher other expected production, as well as all this African swine fever going around and around. But right now, on a technical side, it's completely broken. So we're going to wait and see where that bottom is going to hold up. But the volatility is through the roof right now.
Okay, have you heard anything about any plant shutdowns based on weather or not today?
I have not heard anything today.
All right, just wondered. There was some talk about that earlier this week. Well, thank you, Scott, for talking with us. Always a pleasure. Scott Gecas of Walsh Trading in Chicago, and that's the latest.